Good afternoon, everybody. Thank you very much, I think, for inviting me, and I'll have my 15 minutes then. In my CV that you've just given a brief synopsis of, though, you did forget a couple of things, and that is that I qualified as a chemist and worked 15 years in the engineering industry, and I come from the north of England. And the reason that I say that is because I think it is important that we put a balance on what it is that we talk about. And I think a balance of experience, if I may say, is a very important thing. Now, it's, as you say, I'm the chief executive of the BBA, the British Banking Association. But of course, it isn't British. It isn't the UK banks and the UK financial services industry. Do go and have a look at the website, and it will tell you something very interesting. And that is, of course, that we have more than 200 member banks. We have 50 nationalities around our table. Why? Because this is and remains not just one of the largest international financial services industries in the world, but it is the largest centre for international banking. That is one of the great success stories of this country. Now, I took over on the 1st of April 2007, April Fool's Day. What a time to take over. Just in time, of course, for everything to happen. And when I was asked to be the chief executive, the then chairman of the BBA, and who was also the then chairman of Barclays, he said to me, "Angela, what I want you to do is take banking off the back pages of the newspapers and put it on the front." Even to this day, I think I meet my KPIs, and frequently. I had a bare few months in office before it all started. And it is probably just worth spending a few moments on what it was that started. Because what it was that started was, in fact, not a big bank, not an investment bank. What it was the Northern Rock, a pretty small UK lender, a bank that did mortgages, small businesses, centred in the north of England. And what that bank did is on the, what was it? It was the second Thursday in September in 2007. It went to the Bank of England for lender of last resort facilities. It went to the Bank of England for lender of last resort facilities because it had, I'm afraid, done what sometimes happens under these circumstances. It had banked badly. It had lent too much money at the wrong price to the wrong people. So off it goes to the Bank of England. And in the days that we all live in, there was a leak. That day, that evening, I was actually on the Thames. I was having dinner with a group of people, and my mobile phone rang, and I answered it, and the BBC said, "Is that Angela Knight?" And I said, "Yes." And they said, "The Northern Rock's gone to the Bank of England for lender of last resort facilities. We've heard, though it's not going to be announced tomorrow. Will you come and do the Today programme?" So I said, "I'll ring you back in 20 minutes," switched off and said to my dinner companions, "Anybody know about this one then?" Some did. So we had a discussion. I rang back the BBC and I said, "Well, look, the first people you need to go to is, of course, the Bank of England for a comment. Then you go to the regulator. There's always the Treasury. Just come back to me if you've got a problem." At 11:15 that night, just as I was going into bed, my phone rang again. It was the BBC. "Oh, we've rung the Bank of England, the Treasury and the FSA." They said, "They're not coming out to comment. Will you come out and speak on the Today programme?" And so I did. And it was fairly torrid. And it wasn't just then. It was the other 19 or 25 interviews that flowed straight after it. And it does actually, the reason I tell you the story is for more reasons than one. I mean, I was there. And I've been there all the way along the lines. And I hear people say, this happened and that happened. And I know what happened because I was there. And I'll share a bit of that with you today. The second is it shows just how important it is to communicate. You have to be there. You have to give the other side of the view. We live in a world where if it is possible, if it is humanly possible, to jump on the worst pieces of any story, and then only just those worst pieces they will do, you and I all know there is always a balance to these things. And in fact, the Northern Rock going for lender of last resort facilities, which is the most arcane and bizarre expression, does in fact mean that the Bank of England was going to stand behind the Northern Rock. The run was wholly unnecessary. And of course, that run was shown around the world. There were only 2 stories taking place that weekend. One was the Northern Rock, and the other was foot and mouth. And we see, and the chief vet and myself, we kept meeting each other, and one point I said, I'll do foot and mouth and you can do the Northern Rock. Would anybody have noticed any difference? Life moved on. But the financial markets were in trouble. And the financial markets did not recover after the Northern Rock. They limped on because we had a world with serious economic problems. Economic problems which are now only just seeing some of them as the Eurozone continues in difficulty. And those economic problems are at least in part caused by 2 things. The first is that the savings of the East flowed into the West. They are the savings part of the world. We are the spending part of the world. Cheap capital flowed around. Everybody loved cheap money. Many of you in this audience borrowed for your iPads or your iPods or every other sort of i or pod under the sun. You know, cheap money was an attractive proposition. And the second reason is that governments for the last 20 years of all political persuasions and in the run-up to elections of all political parties went to the polls telling the people it was possible to spend more on them, on certain sectors, on whatever was the particular issue that individuals wanted to. That somehow money could just be borrowed. There was no adverse cost. Now, what happened in the banking industry? Well, some banks got it massively wrong. By no means all. In fact, the majority actually survived well, even though the global financial system froze. Globalization, of course, is a means whereby you can flow bad things around the world, just as you can flow good things around the world. So even though that global financial system froze at the point when Lehman's collapsed, and the freeze was because no one knew what was happening, the overwhelming majority of banks were survivors. And of those that failed, the overwhelming majority of those that failed were not investment banks, were not even global banks. They were not universal banks. They were the small savings and loans organizations. And in Spain, you see that right now, as those small savings and loans organizations, the cajas as they call them, are having to be folded up together and having to find some way of paying what they owe and sorting out their debts. Bad banking, I'm afraid. Bad banking. Just lending too much money to the wrong people at the wrong price. And so whilst you will always get those who jump on the public platform and say, we want to chop up the banks, we want to get rid of those swines, we want to shoot the buggers and string them up, what we really have to do is always construct a future not out of emotion, not out of saying, oh, I simply don't like that, but we have to construct a future out of the facts of what happened, and we have to construct that future properly. Now, there are a number of international standards coming into the banking industry. Some of those are coming at one speed, some of them coming at another. We don't know at the moment at all how many countries will implement them. But the international standards due to be put in place by 2019 have overwhelmingly already been put in place in this country now in 2012. I can just repeat that. The international standards in Basel, with a timetable of 2019 for implementation, have more or less all been implemented in this country now at 2012. And we're at the moment increasing those standards. This is the more capital, more liquidity, more stability piece. And that's important to recall and remember. deadlines put in directives or proposals have not necessarily got a lot to do with actuality. We do not know what other countries will be doing, apart from Switzerland, who follows very much the same path as the UK. But what we do know is what we're doing. And the overlay on top of that is something else, something which has a very boring name. Because it's boring, people put it to one side. It's called a recovery and resolution plan. And what that requires all the major banks to do is sort out all their legal entities, and I mean all their legal entities, identify their activities against each legal entity. So it is possible, if one gets into trouble, to deal with that piece, not the whole enchilada, not a half or a quarter or 90% or 25% or all that rubbish that people talk, but actually to deal with the piece. And how do you deal with it? I will not go through the technicalities. But this isn't some pie in the sky, some sort of vain hope, or some sort of phraseology. This is an actual, practical fact. Don't believe me. Go to the Bank of England. They're the ones who run this process. And on top of that, we will overlay in this country the ring fencing of Vickers, which again, of course, is already going to be starting probably in 2013. It will be done long before any deadline dates. But the US, looking at it from a different matter, is putting its requirements in a different place. So we ring fence what is known as retail. And by the way, at the moment, that cuts right across the financing of small and medium-sized businesses in this country. We need to come back to that. It also slices through the international personal wealth management, of which we're one of the largest centers in the world still. But as we put some sort of ring fence around there, so in the US, they're doing it around their wholesale piece. But we are an international industry. So what that means is that we'll end up doing both. And the cost, therefore, both to a bank of increasing capital, increasing liquidity, then putting ring fencing and having to treat each and every part differently, means, of course, that the cost of banking will go up. I know that people will always focus on the big pay of the few. It is actually an industry in which the many get paid the same as many others in other industries. But the big pay of the few, whilst it might be a focus for anger and hatred, and indeed in part for envy and greed as well, and whilst many of you may say it does not bring the right behavioral consequences, the real issue is not that. The real issue is that if you have stability, so it costs more. And you can't actually have all the things of both stability and growth. You can't increase the barriers to entry into the industry and also expect more banks to be created. You can't actually have a more cost and expensive entity to operate and not see an effect on the price and availability of credit. And as the so-called Financial Policy Committee, the macro stability piece comes in, that, again, gives to a third party the ability to really affect people's lives. Not necessarily badly, but what it does mean is that when a boom comes along, that boom will be quenched, which can result, of course, in your children not being able to get on the mortgage ladder and your parents not being able to get off it. So we need an honest and open debate. I in no way am walking away from saying there aren't problems, there weren't problems. Of course there were. Nor do I say there shouldn't be changes. Of course there should. But we are having, at the moment, an unclear and not honest debate in this country. It's happening on the back of emotion and anger. And emotion and anger are justifiable, and they are very understandable. But as I say, having lived through it for 5 years, and still feeling that I'm living in it now, I am very, very concerned that because the noise, the vuvuzelas of emotion and public protest keep on going, it drowns out the reasoned debate, and it makes it very difficult for the politicians to take the sensible decisions that they do. And of course, coming from the north of England as I do, having been in engineering for 15 years as I was, and being the age I am, I have lived through many recessions. And as part of that, I have seen us lose some of the major industries in this country. I have seen us lose great chunks of our engineering industry. I've seen us lose chunks of manufacturing. I've seen us lose some of our aerospace, and I've seen us lose a chunk of our pharmaceutical. And we have lost them. Why? We have lost them because either we haven't regulated them properly, we haven't taxed them properly, we have not made them attractive enough for people to go and work in them, or we simply have not cared. We have a great industry left in this country called financial services, of which the key flagship is banking. And we are known not only for that, but for the toxic atmosphere we've created and continue to create. I urge you all to put your emotion and your anger and the buzz phraseology to one side. Take part in the serious debate so we maintain this great industry in this country and enable it properly to finance the economic recovery. Thank you.